In this video, I'm going to be going over counter trend trading once more, and I'm going to teach you how to utilize different time frames, different market structures on different time frames to counter trend trade successfully. So I posted this short setup on Euro USD this morning, so we're going to go over this specific short setup. Euro USD. So higher time frame chart on this, we can clearly see that Euro USD is operating within a bullish market structure. It's consistently putting in higher lows. It's consistently making higher highs. So clearly, Euro USD is in a bullish market structure. But this morning, coming into New York session, New York kill zone, we were up here. What is up here? Up here is a premium marketplace. Something can be operating within a bullish market structure, but it can also be in a premium marketplace. Premium means expensive. Again, those of you who are not familiar with when I say like premium discount pricing, I'm going to leave a link to the video, some videos in the video description that you can watch after this video, then come back and watch this one. But premium and discount, premium means expensive, and Euro USD right here, you see how it rallied up and it took out this old high right here? See that? So it came up and took out that old high. Once it took out that old high, whenever you take out old highs like that, you're in a premium marketplace. While it's ripping up like this, while it's making new highs like this, it's very bullish, no doubt about it. It's very bullish, and it is operating within a bullish market structure, but it is in a premium. So knowing that it's in a premium marketplace, there's opportunity in that. There's opportunity in that if we have knowledge on how to operate or how to utilize lower time frame charts, lower time frame market structure, we can then capitalize on that move back down into a discount. So what we're going to do here is, because we were coming to New York kill zone and this range was already created, we're going to take our Fibonacci from the low to the high of that most recent price range on the surge up higher. And what we're going to do is we're going to find 50% equilibrium of that price range. Remember guys, this is on the 4 hour that we're currently on the 4 hour chart. This is operating within a bullish market structure, and it's still operating within a bullish market structure, but now it has pulled back into a discount at the time that I'm making this video. So that horizontal green line that I noted is 50% equilibrium of that price range of that surge higher. Anything above that equilibrium price point is a premium. Keep that in mind. Anything above that is a premium marketplace. Price likes to move from discount to premium, premium to discount every single time frame. And you can capitalize on the moves back down into a discount in this example by utilizing different time frames, different market structures. So you're just using the criteria that I've taught you thus far. Market structure, very, very simple stuff. There's not a lot of moving parts to it. Now we're on a 1 hour chart now. So we had this shift down lower right here on the 1 hour chart right here. And you might be thinking, well, that didn't give you no opportunity. It's just one big leg lower. There was no opportunity in there. There was an opportunity in there actually. And so I'm going to put in some data dividers real quick. All right. So remember, green line is equilibrium with that 4 hour price range. We're ripping up right here. We're ripping up right here. We're in a 4 hour premium. Same deal with the 1 hour chart, guys. See how the 1 hour comes up right here and it takes out previous day's highs. Previous day's highs is a key liquidity pool. It's a significant liquidity pool. And we came up and we took out previous day's highs. That's a premium on the 1 hour as well. Okay. So we're in a 4 hour premium. We're in a 1 hour premium. Both time frames, both the 4 hour and the 1 hour, very, very, very bullish, very strong. But we took out a key liquidity pool. And as I told you guys, price is always seeking that next key liquidity pool. Price is moving in the direction of least resistance. Once we take one significant liquidity pool, it's searching for the next. It's searching for the next. Okay. So we took out, and we're going to combine all of this. So like combine the fact that 4 hour premium, 1 hour premium, we're taking out previous day's highs right here. Boom. Where's the sell side? We just took out buy side liquidity. Now it's going to seek sell side liquidity because it already took out that buy side. It's in a premium marketplace. It's expensive on the 4 hour and 1 hour. Now going to a 15 minute. Oh, actually one more thing. What we're also going to do is I'm going to note this 1 hour price range. See right here, that low prior to that surge up higher. What I'm going to do is I'm going to take that 1 hour price range as well. And I'm going to note 50% equilibrium of that price range. Anything above 50% equilibrium is expensive. So that's where you want to be looking for short to for counter trend trading. There's 50% equilibrium of that price range. We took buy side and then we seeked sell side. Now on the 15-minute chart. So again, we came up, we took that buy side liquidity. We're consistently trending higher, trending higher, trending higher, trending higher. What happens next? We have, see how we broke the swing low right here? We came down, we broke that swing low, or we broke these swing lows in here on this leg lower right here. Shift in market structure right there, high probability shift at that because we got our fair value gap. And this is where your opportunity is. Now, again, you could wait for the full confirmation on your lower time frame, wait for all 3 candles if you want, but I'm telling you, whenever like on your execution time frame, meaning your lowest time frame that you go for entries, if you wait for those 3 candles, you will miss a lot of entries. You will miss a lot of plays by doing that. But again, if you want to be completely safe, by all means, go for it. Here was the thought process. So 4-hour premium, we've already concluded, 1-hour premium, and now we get a 15-minute shift in market structure. Okay, we all know what a shift in market structure looks like based on what I've taught you thus far in this series. That is a high probability shift in market structure. We have the fair value gap created on the break. We have the strong close beneath the level. So it is a high probability shift in market structure on the 15-minute chart. So in this example, our execution time frame, our lowest time frame chart, we just took buy side liquidity, which is a significant liquidity pool being previous day's highs. We're in a 4-hour premium. This move right here up into that displacement that was created through the shift in market structure, I want you to note how that move higher moved up into a premium on the 1-hour chart. That is your entry in a 1-hour premium while the 15-minute market structure is bearish. Okay, so I know some of you are kind of lost right now because it is kind of a little bit more of a complicated subject, but let's go through it one more time, the thought process. Number 1, the 4-hour is in a premium, meaning it's expensive on the 4-hour chart. We concluded that. The 1-hour chart is also in a premium after it took out this high right here. Remember, this is that 1-hour price range. Now it's just displayed on a 15-minute chart. Look at my cursor. See that move that was created right here during London session? And that middle green line is equilibrium of that price range, of that 1-hour price range. We just took buy side liquidity, a key liquidity pool. What did I tell you guys? Price is always seeking that next liquidity pool. We took buy side. Now we're probably going to search for opposing sell side liquidity after taking out that buy side liquidity. 15-minute chart is our execution time frame where that's where we look for that change in market structure to capitalize on the move back down into a discount. Right here, we get our shift in market structure on the 15-minute. Remember, our other 2 time frames are still bullish, but the 15-minute is bearish. It just had a bearish shift, a high probability bearish shift after taking out a key buy side liquidity pool, which is key. What does price do next? It pops up into a 1-hour premium, a 15-minute premium, because remember, the 15-minute market structure is bearish, but now it's this popper up right here. See that? See how it moved up? See how it moved up above 50% equilibrium of that price range on the 15-minute on that displacement leg? It's above 50% equilibrium. Therefore, it's popping up right here into a premium on the 15-minute. The market structure just shifted to the bearish side. It's popping up into a 1-hour premium. So it's meaning it's expensive on the 1-hour chart and it's expensive on the 4-hour chart because it's well above 4-hour premium as well. With this example, you would want your entry in that 1-hour premium. It needs to be in a 1-hour premium because the market structure is bullish. Remember, you want that entry at a point where it's in a premium on all time frames. The market structure is bullish, but you want your entry to be in a premium on all of your time frames. We have it on the 4-hour premium. It's well above it. We have it in the 1-hour premium right there. And we have it in 15-minute premium right there. 15-minute market structure just had a shift. So we're anticipating that it's going to have a full switch to the bearish side. And what happens? It slams off of it and it attacks the opposing sell side we were just talking about. We took buy side, now we're searching for sell side. There is that sell side, which is low of day, which is that swing low level. See that? Again, attack buy side, it attacks it on this move up. It's in a 4-hour, 1-hour premium. Okay, 15-minute market structure at this point is consistently trending higher, but it's taken out a key liquidity pool. So now we're on alert for that shift in market structure to capitalize on the move back down into a discount. Boom, it has a shift. It pops up into a premium on all 3 time frames and it attacks opposing sell side. That right there is a setup that you will see often in the marketplaces. It's a way that you can counter trend trade successfully, but you got to be fully aware of where you are on all of your time frames. You need to know whether you're in a premium or a discount marketplace. You need that lower time frame confirmation, that lower time frame shift in market structure. You need everything in conjunction, okay? Because when you're counter trend trading, you do got to be a little bit more precise. You got to be a little bit more on it than if you're trading with the overall trend and you have multi-time frame alignment. So you got to be a little bit more precise with it, okay? So that right there is a setup, right there attacking that low of day sell side liquidity. And then you can see at this point, it's traded lower down into a discount marketplace. Now it's trading below that 4-hour discount. 1 hour has had a shift in market structure right here. That is a shift in market structure. So something that could play out here, we'll see what it does. Once it trades back up above 50% equilibrium of this price range now, it trades above 50%, aka in a premium of that 1 hour price range. See right there, once we trade above 50% equilibrium, we'll be back up in a 4 hour premium, 1 hour premium, and then we could use our 15-minute, look for that lower time frame shift and look for these lows to get taken now. That's how you do